It seems to make sense to me that during the holidays, you have more volume, you have more shipping, so that would likely translate into higher prices for the stocks. Does this happen every year? What's different about this year?
Well, what's different about this year is we're seeing an extraordinarily large volume of import containers. You look at Long Beach, LA in October set an all-time record. We know based upon the FreightWaves sonar data that volume has continued to be extraordinarily strong out of the ports. And those containers contain product that is destined to be bought either off a brick and mortar retail shelf or via an e-tailer.
But do you think that increase in volume is a number of companies trying to bring in the supply ahead of these increased tariffs that, as of now, are going into effect on January 1st? And then does that mean that then we'll see a drop in volume after the beginning of the year? And what does that then mean for the transport group?
No, I think that's much more applicable to maybe bulk shipments, large cargo, if we're moving iron ore, things like that. This is directly related to the behavior of the person who's the head buyer of flat screen TVs for Best Buy or shoes at Nordstrom's or the latest tech devices for Amazon. Pick one. All of those buyers collectively are trying to satisfy the holiday shopping demand, predicting rather accurately as a group what's going to happen. And then it's up to the FedExes, the UPSs, the XPOs of the world to actually fulfill, get it to your door or get it installed.
Don, clearly there's enough demand in shipping these days that there's a lot of shippers out there and they're all beating each other up on price to try and gain more market share. Will there ever come a day when they will have some pricing power, where they're able to raise prices and still keep the same demand going here? And I'm thinking of the UPSs, the FedExes, and the rise of Amazon in this whole thing as well.
Yeah, Bill, that's a great question. The bottom line is that this is the end of the transportation segment that has pricing power because you're paying for such high levels of execution and service. The historical track record has been this is the end, the high value, low density end of the goods spectrum in which you can actually demand and receive higher rates. Consistently, they've raised rates. You have to be able to execute, get things delivered without service interruptions. You know, your previous segment on DHL is a great example. They waded into the market in the early part of the 2000 decade, and by 2005, they said no mas, they quit. They had lost $5 billion because they just couldn't execute as well as FedEx, which can't execute as well as UPS, which FedEx, which executes UPS, and UPS, who out executes the post office.